And now let's look at other revenue. Other expenses within a three-way financial model is similar to our main operating expenditure analysis. The key difference being that other expenses are infrequent or immaterial costs to a business. If any items within your other expenses analysis are frequent or material to a business's profitability, we would recommend including these within your main operating expenditure or cost of goods sold analysis. Now, when we first bring in your historical other expenses information into your financial model from your accounting package, this is brought into your historical income statement located at the bottom of your net operating expenses section underneath your main operating expenditure categories. In this example, you can see we have one category of other expenses titled other expenses, and we have the historical expense information on the right hand side of the sheet. Now, when we forecast other expenses, this is handled on the revenue and expenses sheet located at the bottom of the sheet underneath your other revenue analysis. Now, as you can see, we have our one category of other expenses being pulled through, and this has its own unique driver. If you have a variable drivers model, your default driver will be year-on-year growth rates, and if you've opened a non-variable drivers model, your default driver will be amounts. As you can see, we're currently applying a 2.5% year-on-year growth rate for our other expenses forecasts. Looking back at April 22, we can see our historical other expenses figure was 13.3. Applying our 2.5% year-on-year growth rate for our April 23 forecast, we can see that our other expenses forecast calculated as 13.7. When looking at the financial statement impacts of other expenses within a three-way financial model, other expenses hits our income statement and cash flow statement. Other expenses are included within our net operating expenses section of the income statement, decreasing our net profit after tax and therefore decreasing the total equity on the balance sheet. Other expenses are also included within our other cash payments within the operating section of the cash flow statement. This change in cash held decreases our cash at bank, lowering our total assets and therefore balancing our balance sheet. Looking back at our example, if we want to see our 13.7 of other expenses hitting our financial statements for April 2023, we can head back to our table of contents and activate our financial statements. Firstly, looking at the income statement, if we expand our net operating expenses collapse rows, at the bottom of this section we can see our other expenses category, and if we scroll across our time series until we get to April 2023, we can then see our 13.7 hitting our income statement. Scrolling to the bottom of the same sheet to look at our cash flow statement, if we expand our cash payment section, locating our other expenses category at the bottom, and again looking at April 2023, we can see the same 13.7 hitting our cash flow statement. Now, the only additional area of analysis that other expenses has implications with is within your corporate taxation. Corporate taxation will be handled within its own video. However, for the purposes of this video, when we're looking at the financial statement impacts of other expenses within a full three-way financial model, other expenses is included within our net operating expenses section of our income statement, decreasing net profit after tax and decreasing our total equity, as well as being included within our other cash payments within our operating section of our cash flow statement, decreasing our change in cash held, therefore decreasing our cash at bank, decreasing total assets, and therefore balancing our balance sheet.